What's up, everybody? JT here, founder of Find Your Edge Trading, and today we're going to go over how to use the simple moving average. Before we get to that, make sure you like and subscribe to our channel as you look forward to future content that we will be providing. So without further ado, let's get started. Now, first of all, let's talk about what the simple moving average is. The simple moving average is taking a certain number of candles and taking the average of those candles with the price and using it as a line on a chart. So what we'll do now is we're going to put up a few different moving averages on the chart, and then we're going to be able to come up with some possible strategies or ways to interpret this in the future and how you can use the simple moving average to your advantage while you're trading. All right, so without further ado, let's take this forward. So currently we're on TradingView. We're going to go to indicators, and we're going to go to simple moving, and then you'll see average here. Or actually, let's type in moving average, and then simple right here. We'll click that. All right, and you'll see this preset line right here that comes up, and it's going to be this SMA 9 close. All right, so what we're going to do is we're going to go to the settings here, and we're going to actually add 3 indicators here. So we're going to add another 2 more. So what we're going to go is we're going to go back to that, type in moving average, simple. We'll click that one more time, and then one last time. Okay, so now we have 3 of those, and we're going to edit these so that we're going to have 3 different lines for 3 different periods. All right, so the first one we're going to put on is the 20, and that's going to calculate the last 20 periods and make that an average. We're going to change that style to yellow, and we're also going to make it just a slightly thicker because I like to see them a little bit better in my chart. And then I hit OK. The next one, we're going to go down here and we're going to hit that little pinwheel, which is the settings tab, and we're going to make this one the 50. And we're also going to make this one green. Or no, let's go with a different color. Let's go with red or fuchsia. Make this a little bit thicker as well. And so this one is going to be the 50, the last 50 candles. Okay. And the last one, we're going to go to settings, go to 200. We're going to go to style, and we're going to change this to orange. And we're going to make that there. Okay. So what you'll see is this is a daily chart for Apple, okay? And primarily what happens is the shorter the period of the moving average or the simple moving average, the more it will fluctuate, okay? So as you can see here, this orange line is the 200, and you can see that that takes a while for it to curl back up as it's just now starting to pull back up over the last year to the upside. You can see that the 20 has been moving up for a while now, and as well as the 50, which started back right about here. Okay, but you can see the difference in the term between the 20 and the 50. It took a little bit of time. All right. Now, whenever you have shorter term moving averages above a longer term moving average, that's typically what they like to call a bullish cross. So as you can see here, the 20 crossed above the 50 right here, and this is what you would consider a bullish cross. And as long as the 20 remains above the 50 here, then you would consider that Apple is in an uptrend. Now, if you go back here previously, you can see that the 20, which is this yellow line right here, crossed under the 50, and this would what you would be calling a bearish cross, or whenever the longer time frame moving average goes above the shorter term. And you can see that we started to move into a downtrend right there. All right. So people usually use these moving averages as, points of support or resistance, depending upon the trend. As you can see here, the 20 simple moving average has acted as support for Apple over its last bullish run. And you can see that the 50 has been clearly below the price. And as long as price remains above this, then that stock remains in a bullish trend. Okay, the 200 is again primarily used as a longer term tool. Now, one other thing that we can do is we can look at this from a smaller time frame. So let's look at this on, let's say, a 15-minute chart. Okay, and you can see that this looks a little bit more granular, and we will actually just turn on RTH just for this purpose. So we turned off the extended hours, but I just wanted you to see it this way. You can see that we actually got a bearish crossover here on Apple just this past Thursday, and you can see that the stock actually went down on Friday. And you can see that we had a bullish crossover here where the stock went up as well. So this is just a simple tool that some people like to use whenever they're trading stocks, futures, Forex, whatever you may be. A lot of people like to use these as, like I said, support, resistance, or they like to use the crossovers for their bullish entries or their bearish entries. Now, these are just some of the more widely used moving averages, but there are some other ones that people like to use. Some people like to use the 5, the 9, the 13, the 34. It just depends. You have to figure out what period works best for you. And speaking of that, what periods, if you do use SMAs, work best for you? Make a comment below in the box, the comment box below us here. If you have any further questions, feel free to drop those as well, and look forward to future content.